On my radar for quite a long time, watching it in this strong downtrend and then, watching a massive explosion up.
A lot of people have learned a lot from this event.
I think the GameStop taught a lot of people about risk management.
Hi, welcome back to the show. We're here with Gregory Bream. He has a YouTube channel called Weenie Trades. It's a stock trading channel with 3.4 thousand subscribers. So please welcome to the show, Greg.
Thanks for having me.
Of course, of course. You had to have been there from the very beginning with GME, or at least somewhat.
Yeah, just a bit. Yeah, it was definitely on my radar for quite a long time. Watching it in this strong downtrend and then, watching a massive explosion up, I figured it was a great opportunity to cover on the live stream and maybe show people some technical analysis on, different levels that you can buy and risk off of. I'm not here to tell people where to buy or where to sell, but I am here as I'm a probabilities trader. I like to focus on the technicals. And so, yeah, it was super exciting. It was great to cover live. Lots of people had a lot of fun.
What was it like to see that just continuously shoot up?
Oh, yeah. The stock just went on a parabolic run. And that's because of, all the short sellers. So there was a lot of big hedge funds. They're like, hey, they're looking at the balance sheets. They're doing some fundamental analysis. They feel that GameStop is going to go down. So what you do in that scenario, if you think it's going to go down, you can actually short sell it and make money as a stock price drops. But the caveat with that is that if the stock price goes up, you actually start to lose money. And so that's where the Reddit and the WallStreetBets community found a little loophole. They found a little inefficiency in the market. See, most of the time GameStop would have fallen down, but they banded together as a community and they said, hey, you guys, there's a way that we can actually profit big off of this. The little guy can. Let's all buy together. And let's push the price up because that's the only thing that mostly drives a stock price is buyers and sellers. So if everybody's buying, they push the stock price up. The short sellers of these big hedge funds, they've got to buy their position back at a higher price, causing it to go even higher. And that's what causes that massive parabolic squeeze, gets a ton of attention, ton of hype, super crazy stuff in the market in 2020, 2020.
And I've asked this from a lot of people. The short squeeze probably already happened. Is that correct?
Yeah. So, I mean, it depends on, what time frame. I mean, there's always shorts getting squeezed on 1 minute time frame every second of every day if the stock price breaks up. But yes, the major part of the short squeeze has already happened. It's fair enough to say that 500 should be the top. I mean, unless Elon Musk opens up like a GameStop on Mars, a virtual GameStop on Mars, then GameStop might go back up to 500 at round 2, round 3 of the squeeze. But yeah, for the most part, it's safe to say that the squeeze is over.
But it's just beginning for everybody else because now a lot of people have learned a lot from this event. People, just regular retail traders.
I think the GameStop taught a lot of people about risk management. And what I mean by that is that there's a lot of people that made a lot of money on the way up. There's a lot of people that lost a lot of money on the way up. There's a lot of people that lost a lot of money on the way down. Maybe they bought too high. Maybe they bought it at $500 a share and they didn't manage their risk. That's the biggest key, that I like to show at Weenie Trades. Don't have to be sure to understand the risk of every time you're entering into the market. Have a stop loss, meaning have a level where if I lose this amount of money, I've got to punch out. Because if you don't, the losses can just snowball. It can always get worse. And so if you don't have that stop loss in mind, that risk management aspect, a lot of people are going to get burned. So I hope that a lot of new retail traders learned a little bit more about the market, that it's not just, if you like the market and want to be in it for the long run, you've got to manage your risk. You've got to punch out at some point. on both sides of the story.
But there's this condescending attitude coming from Wall Street toward retail traders that they're trying to look after you, right? So what's that all about?
What's that all about? I mean, everybody's looking to make money. There's a ton of arguments whether Wall Street is for the people or not for the people. The main thing is whether they're there for you or not, you've got to take care of yourself. Right. So that's kind of ties into regulation and the pattern day trade rule. Here in the US, you need $25,000 to be able to day trade as much as you want, buy and sell, or sell and buy if you're on the flip side of the trade. So that regulation is there to protect. It's arguable whether that actually protects a lot of people, because some people may have the $25,000 and they're new to the market. They haven't practiced. They haven't put in years of time, lots of experience. Trading is like a sport. It's like you're in a professional sport. Right. So because of that, you need to practice. And so that regulation, it's arguable whether it's good or not, whether Wall Street is there for you. Everybody's looking to make money on their own for the most part in the markets.
Now, you were a big proponent of Robinhood. I know you've been trading on Robinhood. Are you still a supporter of Robinhood after this whole debacle?
That's a great question. Yeah, I do trade Robinhood. I like Robinhood. It's not my main broker. I have multiple brokers. Okay. Just because, sometimes I remember during the virus crash last year, the Robinhood froze up, and I had some crazy positions going on, and I couldn't punch in or out, and that was just something that I didn't really feel comfortable with. So I needed to have multiple brokers. Robinhood, I think for the most part, it's a good, friendly broker for most people. I do think in the most part they're looking out for everybody. There's a lot of they've gotten a lot of backlash for limiting the buying positions on AMC, GameStop. I don't think they should have done that, but I'm sure there's definitely more to the story than them just limiting to protect your risk. Sure. They're also having they're the middleman for routing those orders. So because of that, they're routing those orders, and they probably need to work a little bit on their order routing platform, because they're saying, oh, we can't handle all these orders. So because of that, we're going to limit the amounts of buys that you can do on GameStop and stuff like that. But I like Robinhood. I think it's a good broker, no commissions. It gets the job done. It's access to the market.
Oh, isn't there evidence, though, that they have actually traded or sold trades, forcing people to sell trades when they didn't want to?
Oh, yeah, I have heard reports about that. And that definitely is not okay. If you're forcing people out of a position, I mean, it's always a case-by-case scenario. Thankfully, it hasn't happened to me, but that just because it hasn't happened to me doesn't mean it hasn't happened out there. Yeah, you definitely can't. By doing that, it makes it less of a free market. I mean, it's arguable that this is a free market in general, but it makes it a little bit less of a free market if you're going to be able to, if you're forcing people out of their positions, if you can't let them buy, let the people trade. It's kind of like a revolution. Let the people do what they want with their money, whether it is risky or not. That's again why I want to educate people on the risks of the trades they're taking, so that they're already educated. They don't need to be babysat. Right. I don't think that Robinhood should have done that. And and that's the reason Robinhood is not my main broker. It's not the best. I think it's not the worst, but that's just my opinion. Everybody's entitled to their own opinion.
I think, though, that does seem like legal grounds for a lawsuit, especially, you could argue damages on that pretty easily.
Oh yeah, easily. Yeah, they're gonna have a pretty big legal battle. It depends on the number of cases, how the battle goes. That's definitely going to be a tough fight for Robinhood. I wonder how they're going to handle the situation moving forward.
The real big problem with Robinhood could have been the fact that they just didn't think that it would grow this big, this fast.
Yeah, it's because the pandemic, more people are staying at home. They're trading stocks. Robinhood's a nice, easy, it's the simplest platform by far, in my opinion, the simplest platform. But with that ease, everybody has access to the market. And yeah, they grew way bigger than they thought they ever would. Their systems are probably working overtime 24/7. So they definitely need to think about how to expand, fix the ordering issues, try to let the people trade, let the people do what they want with their money.
Absolutely. So, Greg, tell us how you got into stock trading, and moreover, how you became a YouTube analyst.
Yeah, that's a really great question. So I've been trading for a little over 4 years. It kind of started when I really just kind of wanted to make some money online. I wanted to figure out different ways, and like, oh, here's a way to trade stocks online. Opened up account with like E-Trade, and that was $10 to buy, $10 to sell. That didn't with such a small account at that point in time. I'm glad I didn't start big, anyways. It just kind of got put on the back burner. But then when I was in college, I'm taking all these finance classes. I'm a business analytics major from Hamline University, graduated 2019. And so basically during that time, we did this personal finance and investing course, and we actually got to manage the college's portfolio for stocks. And that's where we did fundamental research. And in that class, one of my friends, he said, hey, you can do Robinhood, right? And that Robinhood had the free commissions. And that was just so nice because I was able to learn and start small so early because of those free commissions. So that's why Robinhood has a small little piece in my heart. But again, you got to get more advanced later. The charting systems did not develop. So I took multiple courses and practice. Trading is like a game that I take seriously, though. I take it seriously. I practice in the simulator. I'm constantly trading different setups, practicing different setups, marking it down on the spreadsheet, figuring out what works best for me. I found that, I love the options market, where you can learn about, standard deviations, probabilities of stocks hitting certain levels, different strategies to profit off of any move in the market. And it really just kind of took off. And as with most traders, you kind of lose money your first year or two. You lose a little bit less money, then you break even maybe, then you make a little bit of money, and then you start really making money. So there's a really steep learning curve. So that's what I always remembered, and I'm glad that I stuck with, is that you only want to be trading with a lot of money once you're good at trading. There's tons of tools to practice for free, and if you really want to trade live small. That's why I wanted to show Weenie Trades. Trade small. You can really learn with lower risk. And then you can get better and better and better. As you get more and more profits, you can withdraw half of those profits, put them in your piggy bank. That's a form of risk management, because your money in your broker, it's not guaranteed money. If it's in your broker, just understand the market is volatile. There's no guarantees, but it's been a super fun journey. And I love documenting it, helping people out so that they can speed up their learning curve. Because I want the little guy to, get up there with the big guys.
Absolutely.
Yeah, trading's awesome.
Well, did the passion get you through, maybe some challenging education through this, or did it just come natural and easy to you?
The concept came natural and easy, but you can be a genius and you need to get through those psychological barriers. I mean, when you first start trading, your mind is kind of wired to fail, actually, because nobody likes to take a loss when trading, or in general. But in trading, it's actually crucial that you learn how to take acceptable losses and keep them manageable, nice and tight. And then when you have a winning trade, you try to let it go as long as you can. And now that has to do with batting average, risk to reward. Everybody is different. Some people like to have high accuracy, meaning they make money very frequently. They win on a lot of their trades. But what comes with high accuracy is that occasionally those few times that you lose, you can lose big and give up a lot of those gains. So finding that happy medium, risk to reward, is really important. But yeah, it kind of came naturally. The concepts did, but trading took a lot longer. It's weird when you buy a stock and then it goes down and then you sell. That's usually the right thing to do because it's down from your position. Warren Buffett always says, never lose money. Rule number one of the market, never lose money. He means what he's referring to is you don't want to lose your money in the market.
Right.
So basically, try to manage your risk as soon as it goes down. And if you buy a stock, have an exit plan. You always have an entry, a stop loss, and then a take profit. But if it's going to keep going up, let it keep going up. Try to hold as long as you possibly can. And that took a few years for me to fully grasp. We're always stubborn. We never like to admit that we're wrong. But in trading, you must be completely unbiased, robotic, and admit when you're wrong so that you can get paid when you're right.
Exactly. Well, what's your relationship to GameStop other than stock trading?
Oh, great question. Yeah, GameStop used to go there all the time. Every time we'd pass GameStop at the Mall of America, I'm over here in Minnesota. I'll go check out GameStop. Got to see the different games that are out. I've got a PlayStation 4. Always like the Call of Duties, Fortnite even, but checking out all the different games, Madden. And so, GameStop, it's kind of been that nostalgic, it's kind of the blockbuster, of the gaming industry. And so, yeah, what's my relationship to GameStop in terms of trading? It's been on a strong downtrend. I used to always joke in college, like, should we short GameStop? But we never actually shorted. We just make fun of it. What's the stock to short today? Well, GameStop's an easy one. We'd always joke at in college, and it just kept on going on its downtrend. So that's what made this GameStop rally even more hilarious. And it just became an overall meme. It's amazing that it made national news. The gains people had. It's a really emotional story. Lots of lessons to be learned. So GameStop, well, I'll never forget GameStop. I can't wait to check to see if how many stores will be open after the pandemic. But yeah, GameStop, love it.
Well, I think it's making that transition from the stores to an online platform. Where do you see that going?
I think that's where the opportunity is. I understand that the Chewy CEO should be taking over GameStop. So, and I like what Chewy is doing. I think we're going to be moving to a more digital and online e-commerce and everything. So, I think, yeah, if GameStop could go digital, I think it'll be a pretty decent turnaround for the business. Maybe then GameStop can get share price adjustments. There'll be a lot of different fundamental changes as GameStop moves towards online. I think that would be really great for the company.
Is the stock heading down again? I know it's leveled off around 49 to 50.
Mm-hmm. Yeah, it's actually technically in like a bear flag. So unfortunately, technically wise, it looks to be headed lower. I hate to say that after it's already dropped, but if you go ahead and rewatch the live streams, we basically called near the top. We didn't call out the top, but we said 420. There's ironically, people are going to probably be selling at that meme number, but once GameStop really broke about $220 a share on high volume, that was kind of it for GameStop. I was trying to say, I'm not telling you to buy or where to sell. I'm not here to do that. But GameStop, based on my analysis, is more likely to head lower. And the way it's looking, it's continuing to go lower. Now that can change though if there's a whole new hold the line movement. If there's more buyers than sellers, the stock can actually still go up. And like you said, if there's people that are willing to invest and believe in GameStop into the future, then the stock price can continue to rise. There are more and more short sellers every single day. They want to drive that price down to $20 a share, $5 a share. I wouldn't get too greedy and go lower than 5. Remember, when you're shorting a stock, the most you can make is 100%. If it goes to zero, if it goes bankrupt, the most you can make is 100%. But if the stock continues to rally, you can lose infinite amounts of money, which goes back to the risk, managing your risk. You want to be sure to do that. But yeah, GameStop, pretty interesting. If there's another hold the line movement, we could see higher prices. But I don't see us going to $500 a share anytime soon. Again, unless Elon Musk opens up a GameStop when he's on Mars.
Well, never say never, right? When it comes to Elon Musk, that guy is he's a character.
Oh yeah, I love him.
I love him too.
I love him. I love the stock. I love Tesla stock. I love everything that he does. Forward lookingness. Maybe Elon Musk is going to buy GameStop take over GameStop. That would surely be a price catalyst increase.
If you were to talk to those who are in a kind of a trading funk, you know, they're not doing too well, some words of encouragement, what would you say to them?
Yeah, I would say if you love it, don't give up. But here's a few things that you should do if you're in a trading funk. Every trader usually goes through them. You should really size down your position size, meaning, so if you used to trade with $1,000, maybe trade with like $500. If you used to trade with $10,000, go with $5,000. You know, 100 grand to 50 grand. Lower down your size. Get used to the accuracy of your trades rather than worrying about the profit and loss. That's kind of step one. You can, I always suggest taking a break. You know, the markets can fry your brain if you're too involved with them. It can be a little bit addicting, a little bit. It can be very addicting. So take a step back. Go work out. Go for a walk. If you really are itching to trade, practice in a simulator. You know, go into a simulator, trade with fake money, and just practice the flow of it. Practice your entries. Practice your exits. This is truly like a game of the professionals. You need to be on point and laser sharp and accurate. So you practice that. You can paper trade the live markets. You can simulate and go back in time. But the biggest thing is size down, take a breather, go exercise. Those are always the go-to things for me if I'm ever in a trading rut.
Words of wisdom from somebody who's experienced it. Greg, thank you so much for getting on our show and letting us know your perspective on what's been happening with GME and the future of that company.
Oh, yeah, definitely. Thank you for having me. I had a great time.